This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping this show on December the 13th, 2013. Our time is 8:43. Radio show runs on your favorite radio stations, also archived on Harold's websites, HESradio.com and rarecoloreddiamonds.com. We have a podcast through iTunes. Put iTunes on your portable device, type in World Financial Report on Radio. The radio show is portable. We go wherever you do. I've listened to the radio show on my PC computer, my iMac desktop, also listened to it on my iPad. I've listened to it on my smartphone, my iPhone. It goes anywhere you do the radio show. And Harold does daily market commentary, too. It's on his websites. You can find it on the podcast site as well. Another interesting week. We had the jobs numbers come out last week, and it was interesting. John Crudell, he's actually came out and warned that the jobless rate numbers may be rigged. The Labor Department in the United States, they're currently investigating two different employees for fudging the numbers. Also, this week, we have a chart of the week, and the ratio of bulls to bears for the stock market has never been higher, according to Investors Intelligence. There are now more than 4 times more bulls than bears, and that's concerning because that has not happened since the spring of 1987, and we remember the 1987 crash. Should remind everyone as well, the Fed is going to be meeting here very shortly. Will they taper or not? I personally believe they will not be tapering until the new year at some point. We're starting to see the stock market roll over as a result of the taper talk. Will the stock market be able to continue to go up when the liquidity starts to dry up, if they go that route? Metals seem to be range-bound at this point. On the diamond front, Christie's had an auction in New York City. Outstanding results. We'll talk about those results later in the show. And possibly the greatest featured diamond we have ever had on our radio show. We'll tell you more about it later in the show. We've had some outstanding featured diamonds, but this one could be the greatest of all time. Find out more later in the show. And Harold, I personally don't believe that they're going to be tapering anytime soon. I think the economy in the United States is not what it appears to be. They really do know that. They may try a little taper just to test the water, but the truth of the matter is we're starting to see the stock market roll over, a lot of it due to poor earnings, but as well this taper talk could bring the stock market down very, very dramatically.
And then they would probably reverse it and put it right back again, because that's the way things are. It's got to be pretty concerning that, again, the stock market is only rallying because of quantitative easing. And the fact is that if they do taper, or when they do try to taper, I think they're going to find that the market is going to react in a negative way, and then they're going to have to go back and put the quantitative easing back on, which again is going to cause a problem going forward, because now everybody's going to realize that the stock market is only going up based on money being printed and putting back into the market in mortgage-backed securities and things like that, when it's not moving at all on the economy getting stronger. In fact, that was obvious last week by one of the greatest charts that I've seen, when they showed that the S&P 500 at record highs, and then they showed the GDP, which is the growth of the United States, at absolutely zero. You know, I was saying to Randy, everybody during the course of the week, that if you took a panel of experts, forget about this time right now, because again, all Wall Street is so, in love with the stock market again, because they think that it's moving on its merit. But if you took a panel of experts and you sat them down and you said, what would happen to the stock market if there was no growth, high unemployment, record debt, and excessive money printing, I would think that the majority, if not everybody, would say the same thing, that the stock market would be declining. But that's exactly what's happening right now, and the opposite is happening. Again, they're lying about the unemployment numbers because obviously that's one of the major factors. But again, the numbers are the numbers. The Wall Street may go up or the Dow may go up based on phony numbers type of thing, but eventually it's all going to come forward. And the fact is that when you have no growth, and that was proven by the charts last week with the GDP showing absolutely no growth whatsoever, but the S&P sitting at record highs, it makes absolutely no sense to anybody that understands anything about these markets. Looking at a similar situation, if you look at the commodities markets and you take that same panel of experts and take a very important commodity like gold or silver, both of them very, very important commodities, and say to that same panel, is it possible to have a physical shortage in an important commodity and record sales, so you've got extremely high demand and very little supply? Is it possible for that market to decline? And I'm positive that the panel of experts would say the same thing. No, supply and demand tells you that when demand is high and supplies are low, prices are always going to go higher. So why in the world is gold down 25% this year? It's almost an impossibility if it wasn't something that was planned. So that's where we're sitting at this particular point. I read a report this morning that John Embry, who I have tremendous respect for, as most people do, he's a brilliant, brilliant man, as is Eric Sprott, who's a billionaire, and is Rick Rule. There was an interview with Rick Rule on CNBC this week that I saw, and I thought that the guy was flawless. I thought that he is so sharp, very, very intelligent, and made an extremely strong point. But the fact is that the Sprott fund is down tremendously. It was worth $3 billion at one point. I think it's worth $325 million right now. They took a huge hit this year. However, all three of those gentlemen, who are very intelligent people, are all sticking to their guns, as are we, as are other people that are in the market. And the fact is that this is not just wishful thinking, that we're sitting there hoping that the metals are going to go back up because we want to make money. The bottom line is that we recommended gold and silver as a hedge against, the horrible financial things that are going to come forward. So basically, gold and silver to me is not something that I trade. I don't buy and sell it. I just buy it, and I hold it for the simple reason that it's a hedge against inflation and currency devaluation, which is exactly the reason that you want to own gold and silver. So basically, we're going to continue to see volatility in the market. There's no doubt about it. In actual fact, as much as I hate to say so, I would not be shocked to see gold retest the 1180 level before the end of the year. And the reason for that would be is that there's something called book squaring. At the end of the year, people are going to look at the gains that they have in the stock market versus the losses that they have in the commodity markets, and they will more than likely sell off the commodity positions, and the market will fall, in my opinion, at the end of the year, which is pretty well here. So I think that we'll see a retest of the 1180 level, which is the support level that we saw when the market came crashing down, and very similar to silver. This doesn't change anything as far as I'm concerned. All it says is that traders are going to try to offset their profits in stocks by selling and taking losses on their commodities, and that should bring down the price of gold to 1180 level, and then I would be another major buyer of gold and silver at that particular point. So again, the short-term situation, because of the desperation that's in the financial markets at this point, mostly with the U.S. government, they're doing everything, including lying to us, which is no shock, to try to keep things afloat. But there's no way in the world that the employment numbers are at 7%, because they're closer to 15%, and we know that because all you have to do is look at the numbers that tell you how many people are actually in the workforce, and it's going to show you that 15% of the people or higher cannot even get jobs, and they've stopped looking for jobs. And the job numbers last week that they were so bullish on, don't forget, this is the holidays. If they're not adding people to work part-time at this point in the stores and all that, it will never happen. So they take this situation like the holidays, where again people are being hired on a part-time basis because of the holidays, but they'll be let go afterwards. So what in the world good does that do? All it does is pumps up the numbers, for a month, and then after the holidays you're going to see things fall back down again. In actual fact, the retail sales have been horrible so far. Just look at Walmart. Wall Street may run Wall Street, but Main Street is run by Walmart, and Walmart's numbers are not good at this particular point. So, again, all the confusion in the market, everything that happened this year and last year, I believe is coming to a head. 2014 is going to be a tough year to make predictions, but we are going to make predictions at the beginning of the year. And basically, I think that 2014 is going to be a very troublesome year, especially for the stock market. I just don't see how in the world people are going to look at this market and be bullish on it. But then again, Randy, you came out with the results this morning that it's a 4-to-1 bullishness over bearishness, and that's what happens and always precedes a bear market. So basically, I think the smart money is getting out of the market at this point here, and obviously who's getting in is the general public, which always buys at the wrong time. So again, we got to be very, very cautious going into this new year. It's very possible the market could fall in gold and silver just on book squaring at the end of the year, and then again, with all the money being printed and everything being, happening at this particular point, we could still see a huge rally coming in gold and silver. There's also reference to what happened back in 1979 and 80. And before that, actually, because gold had actually gone from $125, went all the way up to $250, and then came and fell back 50%. That was the 50% retracement that they tend to talk about. Then what happened is that when everybody got bearish on the market again, like they are right now, that's when gold went to $850 and went up 800%, and silver basically did the same thing. I would possibly think that is going to happen again. In fact, I've looked at the charts and studied them, and I've been in this business 35 years. I certainly know how to read charts, and that is a very possible scenario for the exact same scenario that happened back in 79 and 80. It could actually happen again, and we're very close to that happening again. In fact, if you look at the charts on silver especially going into 1980, silver went basically from $15 or $20 all the way up to $50 in one fellow swoop. It was just one giant move upwards. And I've been saying this for the last couple of weeks, where we enjoyed a beautiful bull market for 12 years, something that you could rely on, something that you could read the charts and say, okay, this is the next line of resistance, this is the next support level, and you could basically determine where that market was going to. You can't do that now. It's not possible because the markets are not trading on fundamentals or technicals at this point. It's just trading based on what the government wants it to do, and that's the unfortunate thing. These markets are supposed to be free markets. There are people in the markets that are betting that certain markets are going to go up and certain markets are going to go down, and in a free market, that's what you're supposed to be able to do. If you risk your money and take a position in the market, you deserve a fair chance of that market either moving up or down on its own merit, but unfortunately that's not happening at this particular point. So again, we're going to ride out the end of the year. It would not surprise me to see gold go to $11.80. It would not surprise me to see silver go to $18. But on top of that, it would not surprise me next year to see this gold and silver market take off and make gigantic moves on the upside, because everything is there for the market to do it. All we need to do is get the bullish feeling back into the market, or some of the negatives that are really happening in the paper asset market, which is primarily what's happening on Wall Street. So that's the way I see things right now, Randy. Right now we're up $12 on the day at 12.38. This has been an up and down week. One day the market's down up $30, the next day it's down $30. It makes absolutely no sense, because there was nothing in the market, especially on Thursday, that would have warranted the gold market dropping by almost $30 in one day. There was nothing in the market that would have made the market do that except traders forcing the market down. So as we're trading today, gold's up $12 at 12.38. Silver's up 23 cents at 19.83. Platinum is up $3 at 13.69, and palladium is up $4 at $723. So all these markets are trading in the lower end of the range. Again, the support for gold, very heavy support, is at 11.80, and for silver, it's at about 18.50. The Dow Jones, as we're taping the show, is up 17 points at 15,757. It's had a rough week this week. The Nasdaq up 8 points at just over 4,000. You've got the Toronto Stock Exchange down 13 points. It's been dropping lately. It's back down to 13,100. The U.S. dollar did break the 80-cent level this week. It's trading right now at 80.28. There's absolutely no doubt in my mind where the U.S. dollar is going to. It's not only going to stay below the 80-cent level, but it's going to make an attempt at the 72.5-cent level that we saw in 2011 when gold went to $1,900 and silver went to $50. The U.S. dollar is a doomed currency, and as bad as the euro is doing, the euro is trading at 137 compared to 80 cents in the U.S. dollar. If that doesn't tell you what's going on, I don't know what will. And crude oil, which has been very strong, they took a little bit of profits this week. We're trading right now at about $97. I'm extremely bullish on crude oil. I believe that next year we'll see crude oil not only above 100, but possibly trade in the $110 to $120 level. I'm very bullish on crude. And that's the way I see the markets at this particular point, Rand.
One of the top stories for 2013 was in Cyprus, where bank depositors lost 47.5% of their money, and it was called a bail-in. Worldwide Precious Metals, they put on free seminars in Edmonton, also in Toronto, and they plan on being in Calgary in 2014. And they plan on putting an up-to-date seminar about the Canadian banking system, the shocking truth about the Canadian banking system and the worldwide banking system into a brand new seminar that will be absolutely free. If you would like to learn more and get your name on the list for this free seminar, when they were in Toronto, it booked up. In Edmonton, it was booked up, and no doubt the same for Calgary, too. If you'd like to get your name on the list for 2014, reserve your seat now, because the shocking truth of the Canadian banking system seminar, which I did go see here in Edmonton, really opened up my eyes. And obviously, Harold and I were doing this show on a weekly basis and looking at all the information. So for me to have my eyes opened in different areas that I've never seen before, you know it's a good seminar. And I really encourage everyone to take a look in 2014 at attending one of those free seminars. Connect with Worldwide Precious Metals. They're going to be in Toronto, they're going to be in Edmonton and Calgary for the free banking seminar. And connect with them about reserving a seat now for 2014. WWPMC.com is their website. The telephone number, 1-866-623-2002, 1-866-623-2002. This bail-in phenomenon is really starting to catch a lot of people and their interest, because over in Europe, they're putting the rules in place right now for all banks. If they got into trouble, everything would be a bail-in. That means people, depositors, would pay the price, and that's something everyone should be aware of. Worldwide Precious Metals, company out of Vancouver, a leading Canadian precious metals bullion dealer, recommended by Harold for over 10 years. They're the experts to trust and work with in this very specialized market. Start your own precious metals investment account today. Let them educate you. They're very big on education and making sure you're informed as to what's going on in the financial markets, obviously via our radio show, our free weekly newsletter, and the seminars as well. All gold is allocated either wholesale or premium. Worldwide is there to help you maximize profit, minimize risk. You will have instant liquidity in and out of the market with just a phone call, 24/7 online access. The metal can be stored on your behalf, insured to the full value of your investment. Ask about domestic or foreign storage and premium storage in specific coin and bar form. Stored metal is outside the banking system. The metal can be delivered to your door. Worldwide has worldwide access to the physical bullion you want in your portfolio today. And you need an allocation of precious metals in your portfolio at all times, good or bad. One of the items that we have in our newsletter, and you can get our free weekly newsletter from Worldwide, www.pmc.com, 1-866-623-2002. We send it out via email free of charge. The Canadian Business Channel brought something up. Gold is always a topic of conversation, especially when it pops $27 as it did earlier in the week. One salient point brought to their attention by Dennis Gartman of the Gartman Letter is the author of Got Gold, the Got Gold report, Gene Ahrensberg. He notes that the bullion banks, who are usually net short, are net long, and the hugely net short producers are also net long gold. Managed money traders are carrying record high gross short positions, and the small traders are also short. According to the author, speculative shorts for gold futures are the highest of high-octane rally fuel for gold under the right conditions. And we have stories as well in our newsletter this week in the gold section. People believe that J.P. Morgan could be potentially trying to corner the gold market, and at some point in time they will let the gold market run, and they have the potential, obviously, J.P. Morgan to make a ton of money. We have about 2.5 minutes left in the first segment of our show here. Eric Sprott, as Harold was touching on, one of the brilliant minds, really put it very succinctly. My greatest fear, and this was in an interview that he did during the week, is that governments are broke. Governments have overspent, and there's nothing they can do about it. They're going to fail on their obligations, and when they fail, the economic impact will be dire. Imagine what the outlook for Detroit must be as all of these pensioners finally figure out they're going to get 16 cents on the dollar. How is it going to work in Detroit when there is no spending power? What if it moves on to Chicago or the U.S. government? And he goes on to say there are so many governments, cities, and states which are in trouble. They have to face the music. And once they face the music, the guy who thought he was going to get something is not going to get it. What does that do to the economy? It's not a pleasant outlook. So that's why I worry. I worry about the financial recognition that we have overspent. We've borrowed from the future, massively borrowed from the future. And when you massively borrow from the future, the present gets impacted someday. And Harold, with about a minute left, I do agree with Eric Sprott. It's just a matter of the timing. When these things finally hit, we will have to see. But there are unfunded liabilities in a major way for pensions for states and cities all over the United States. And we're starting to see, even in Detroit now, people that were promised $40,000, they're not going to be getting it. They'll be getting a fraction of it. And what do you do? What do you live on when you expected $40,000 and you're lucky if you get maybe 15 or 20?
Well, it's extremely concerning, obviously, Randy, and debt is debt, and eventually you've got to pay the piper, and when there's no money, see, the U.S., and I know we only have a couple seconds here, but the U.S. thought between 2008, when they put, $16 trillion back into the marketplace, they thought that it was going to right the ship. It just hasn't done it, and they've continued to get further and further and further in debt. And again, I don't see any end in sight for this, and I see the U.S. going down, unfortunately, financially. I don't see any way that they're going to be able to get out of the trouble that they're in at this particular point.
Connect with Worldwide Precious Metals. WWPMC.com is their website. Telephone number 1-866-623-2002. Educate yourself today as to why you should have precious metals in your portfolio at all times. It was a great week for diamonds. We have, I think, one of the most stunning featured diamonds of all time, and great auction results too. We'll come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping this show on December 13th, 2013. Our time is 9:08 Mountain Time. Radio show runs on your favorite radio stations. The show is archived. In fact, Harold was speaking with someone this week who has never missed a show from the very first show we had back in 2001. And you can listen to the archive shows on Harold's websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast. The show is portable. We go anywhere you do with your portable device. Have iTunes on your portable device. Type in World Financial Report on radio. We're there anywhere you go. Harold does daily market commentary, too, on his websites. You can find it on the podcast site as well. Harold recommends worldwide precious metals when it comes to investing in gold, silver, platinum, palladium. They're there to help you when it comes to investing in hard assets. The hard assets you need in your portfolio at all time. They'll educate you as to why you need gold and silver, platinum, palladium. Their telephone number, 1-866-623-2002. The website, wwpmc.com. Harold's website for diamonds, the number one website on the internet worldwide in the galaxy, is rarecoloreddiamonds.com. Connect with Harold at 1-800-432-1022, 1-800-432-1022, the website, rarecoloreddiamonds.com, and Harold's website for the auctions, hsfineauctions.com, hsfineauctions.com. We have had some stunning featured diamonds over the years. I remember that we've had some amazing pinks, some beautiful, beautiful yellows. And, you know, one that sticks out in my mind is that yellow shield diamond that was like Superman's shield. And I thought that was one of the most impressive diamonds we've had. But I think this could be it. And you'll have to decide for yourself. Go to rarecoloreddiamonds.com, click on Featured Diamond of the Week. This week's diamond is a .70 carat pear-cut fancy blue. Blue, they're the rarest of the rare. And then on top of it, you have a pear cut. This diamond is absolutely amazing. What a beautiful diamond. You'll see the video of it online. We have a picture of it in our newsletter. Harold will be happy to send the newsletter to you. Connect with him at rarecoloreddiamonds.com, 1-800-432-1022. And we'll get to some auction results from Christie's magnificent jewel sale in New York this week. But Harold, I think we can say, up to this point, the most beautiful, the most stunning, the most amazing featured diamond we have ever had.
Well, thank you very much. It is spectacular. All you have to do is look at the color, and there's a reason why vivid blue diamonds are so expensive. They've gone up 1,000% since 2005. Back in 2005, you could have bought a vivid blue diamond for about $200,000 a carat. Now they're closer to $2, sometimes $3 million a carat. In fact, very soon, these vivid blues will take over as the rarest over red because the prices are just skyrocketing. So go to the website, look at the featured diamond, and look at the color of this diamond. Then you'll be able to understand why these diamonds are so in demand and why they're the best investments out there at this point. The color on this vivid blue is just absolutely stunning. You know, we have diamonds that start at 15 to 20,000, and we have some individual diamonds that go as high as 40 to 50 million. The majority of our clients that invest in diamonds invest under 100,000. In actual fact, if you look at the auction results from the last few years, you're going to see that it's the less expensive diamonds, the diamonds that we recommend to our clients, that have gone up the most in value and percentage-wise return the biggest returns. In fact, a few weeks ago when that vivid orange diamond sold at a record price, instead of selling for $17 million, it sold for $35 million, and the next day that vivid pink sold for the highest price ever for a diamond, sold for $83.5 million. Obviously, tremendous numbers. But most people could never afford a diamond like that. In fact, most people couldn't even come close to investing in a diamond of that magnitude. However, there are investment diamonds that are very reasonably priced. Yellow flawlesses that go up by 15 to 20% a year. Argyle pinks that go up 15 to 50% a year, depending on the color. These diamonds are not multi-million-dollar diamonds. In actual fact, you can get involved in yellow flawless diamonds for about $20,000. You could buy 2-carat yellow flawless diamonds, which are ridiculously rare, only one diamond in 15 million is over 2 carats, and I can assure you hardly any are flawless in yellow. But those diamonds start in the 30, 35, 40,000 range. In that price range, you get a diamond that's yellow and flawless and over 2 carats, you've got an asset that will do nothing but go up in value. It'll outperform stocks, it'll outperform commodities, it'll outperform pretty well anything. And it could be sold in other currencies, so that adds even more profit to the equation. They're portable private wealth. They never, ever decline in value. They're the most important assets you could buy at this particular point because, again, there's very, very few of them around, and the prices are just going higher and higher. So we recommend the lesser expensive diamonds. Yellow flawlesses start at 20,000, fancy yellows. Then you go to the fancy intense, they're in the 30 to 35,000 range per carat. And then you go to the fancy vivids, which are the best of all, the strongest color, the deepest saturation. And those start at about 60, 65, 70,000 and go up from there. There's very, very few of those diamonds available. They're so rare and the color is so strong that, again, there's so few of them available and the prices go up substantially. If you could ever get into a 5-carat diamond, then you're talking about a diamond that could double in 2 years' time. My wife's 14-carat flawless yellow doubles every couple of years in value. So when you start to get into those larger diamonds, they really take on a life of their own. So you can get involved starting with yellow flawlesses, starting at about 20,000. Then you go to the Argyle pinks, probably the best investment diamonds that you could possibly buy. And the primary reason for that is the one mine that produces 95% of these diamonds is going to close in 2020 or before. That means there will be a shortage of these diamonds, and they're in tremendous demand. We anticipate that the price of these pinks will increase 8 to 10 times what today's prices are. 8 to 10 times, that means that if you spend $100,000 on an Argyle pink, you can get back anywhere from $500,000 to $1 million on that diamond. And if you don't think that that could happen, just go back in history. It's happened many, many, many times. I own a diamond that I bought at the Argyle tender in 2003, and it's a 2-carat vivid purplish pink Argyle. I paid a lot of money for it back in 2003. I paid $350,000 for it, but that diamond today is worth upwards of $3 million. You tell me any other investment that can give you that type of return with the safety that you have in the rare color diamond market. That's where some of your money should go to. Into Argyle pinks, they can return a huge amount of money to you. The yellow flawlesses, the deep flawless whites, those diamonds go up like crazy. They go up by 15 to 25% a year, depending on the quality and the price of them and the size of them. And again, these diamonds never ever decline in value. If you look at what's happening at auction, some of these diamonds are selling for 5 to 8 times what the estimates were. So referring back to the auction that we saw a couple of weeks ago, where the pink star sold for $83.5 million, during that particular auction, there was an orangey pink diamond. It was not even an Argyle, but it was an orangey pink. It was estimated to sell for just over $100,000. It sold for $800,000. That's a diamond that, again, when it was purchased for less than $100,000 and eventually sold for 8 times that amount of money. Again, I don't know of any other asset that can give you that type of return. During that same auction, there was another orangey pink diamond that sold. It was supposed to sell for just over $100,000. And it ended up selling for just over $500,000. So there's 2 instances of orangey pink diamonds that have just skyrocketed in price at auction, and that's what we've been talking about for all this time. So you don't need to buy a multi-million-dollar diamond. I mean, if you buy the right multi-million-dollar diamond, you can make a fortune on it. My wife's girlfriend's grandmother gave her a 5-carat pink diamond ring that she paid $50,000 for 50 years ago that is now worth upwards of $5 million. The longer you hold on to diamonds, the more and more and more they're worth. Best example I can give you is Lawrence Graff, the king of diamonds, one of the greatest diamond people of all time. And he started with nothing. He started off as an apprentice when he was 14 years old, and I read a story about him, and the guy that he worked for said to him that he would never make it in the business. Now he's the most successful diamond person of all time. And basically, 8 years ago, he bought a diamond for $4.2 million. He bought the diamond, he resold it for a profit, and then the diamond came up for sale again this year, and he paid $8.4 million. He paid double for that diamond again. So if that doesn't tell you what's happening in the diamond market, again, nothing will, because here's a guy that bought a diamond for 4.2, sold it, and then bought it back again for $8.4 million. And the reason that he did it was for profit and love of the diamond. So, again, we're in a very, very unique time. We're in a time right now where governments are in big trouble, where the U.S. government is basically broke and in huge trouble. And things can happen going into 2014 that could take your wealth away. If you don't pay attention, and you buy into the fact that, your money should be going into Wall Street, you're going to wake up one morning and find out, just like in 2008, that you made the wrong move and you've just lost all your money again. If you're in your 50s or 60s or 70s at this point and you lose your money again in the stock market, which is very possible, the chances are you will never, ever make that money back again. This is not the stock market of the 90s. This is not anything to do with those times. The fact is that the government is broke. It's shut down for 2 weeks, let 800,000 people go, and can't seem to get their act together. On top of that, they're lying to the public, and they're doing things just out of necessity and out of desperation just to try to keep things going. But when you're $20 trillion in debt and you've got not enough money coming in to pay your debts, you've got a serious problem. Then you start lying about the employment numbers and other things, because one lie leads to another, and now these lies are all coming forward. What Randy said during the show is true. It looks to me like they fudged the job numbers, and they did it on purpose, and they were told to do it by somebody very high up in the government. So that report is ready to read and is available. So again, you've got to look at alternative investments. Look what they've done to the gold market, just because they could. In 2011, gold was at $1,920 and silver just hit $50. Everything was going phenomenal. We were dead right on the markets. Everything was going beautifully. Oil was up. The currencies were going our way. Our clients were making fortunes in the metals. Life was great. Then all of a sudden, one day, they decided to change the game. What they did is they raised the cost of doing business so substantially that nobody could afford to buy gold and silver anymore. They did it purposely. There was no other reason for them to do it. Why in the world would you kill a bull market in something that's important, as important as gold and silver is? Those are two of the most important commodities in the world, and they ruined it on purpose. They did it for the sole reason to bring down the price of gold and to raise the price of the stock market, because, again, people's wealth are determined by what the real estate and the stock markets are doing in the United States. Well, I can assure you, what happened in 2007 and 8 and 9 here in the United States is happening all over again. The banks and the brokerage firms are back to 40-to-1 leverage. They're playing with the stock market. They're playing with the real estate market. And the problem is going to come when they eventually have to raise interest rates, and that is definitely going to come. They are definitely going to have to raise interest rates. And when they raise interest rates, the stock market is going to plummet, and so is the real estate market, and then they're going to try to scurry and scamper to try to get things back on track. But it's going to send a true message to all investors that this is not a real market. It's a manipulated market that's manipulated for the good of Wall Street, and it's an unfortunate situation. It truly is. These markets should be trading on their own merit. So no matter what's going on at this particular point, there are assets, there are investments that do very well no matter what the economy is doing, and one of those is the diamond market. Now let me emphasize the fact that not all diamonds are good investments. In fact, most diamonds are not good investments. There are very few diamonds that are good investments. Colored diamonds in most cases are excellent investments. The ones that we offer to our clients, the flawless yellows, the argyle pinks, the vivid colors, the blues, the reds, the deep flawless whites, those are the type of diamonds that make the most amount of money, and they're not the multi-million-dollar diamonds. Another thing is that we're always improving our information to our clients. We now have, and it will be up within about a week, a learning center. Nobody else has this. We built a learning center, and my friends from Vancouver, Relentless Technologies, they've built all of my websites, including my auction website, and basically they're building this learning center. So they came down here to Florida to shoot some footage and to do an interview, and I was very proud of the way it turned out. They're just putting the final touches on it, and it will be available for everybody to view sometime next week. And again, we're very proud to bring this to you. In fact, not only have we brought to you rarecolordiamonds.com, the premier diamond selling site in the world today, where you can see museum quality pieces and view most of our diamonds in video. But on top of that, we have also the only secondary market to resell diamonds. A diamond is only a good investment if it can be resold. And most diamond dealers out there that are trying to get into the diamond market cannot resell your diamonds for you. The fact is that it's literally impossible for them to do it. So please, if you're going to invest in diamonds, do your homework. Understand who you're dealing with and who gives you the best opportunity not only to profit, but to be able to resell your diamonds. It's one thing for somebody to tell you that they can do things. It's another thing to have visible proof, and all you have to do is attend our auctions and understand that we have 8 Siegel Fine Auctions, the only company of its kind, a company that cannot be duplicated. We sell all of our diamonds from the comfort of your own home. You can participate in one of our auctions and never leave your computer. And in actual fact, it's the only live auction site that sells diamonds and high-end collectibles. And again, we're extremely proud of this. So again, I cannot emphasize enough, we're going to head into some of the most troublesome times we've ever seen. Right now, you're seeing the same problems that happened back in 2008 happening again in the market. They're leveraging heavily, 40-1. When the markets go your way, you make a lot of money. But when the market goes against you, leverage can kill you. And that's what we anticipate is going to happen financially for the next couple of years. Do yourself a favor, lighten up on your stock investments. Again, a stock market that's reaching record highs when there's no growth is a recipe for disaster. There's no way in the world that is going to continue. Get some hard assets into your investment portfolio that can save your financial life, make you an awful lot of money, and be able to bring in other currencies for you, and that's the rare color diamond market. Again, Randy, I've never been more proud of bringing a market like the diamond market to our clients. It's just doing extremely well, and the best results are coming at auction.
RareColoredDiamonds.com, the website. I would say the best featured diamond we have had to date on our show is a .70 carat pear-cut fancy blue. And this fancy blue is stunning. You can see the video online at RareColoredDiamonds.com. We have a picture of it in our newsletter. You can get our free weekly newsletter from Herald. RareColoredDiamonds.com, telephone number 1-800-432-1022. Christie's had a magnificent jewel sale at New York's Rockefeller Plaza during the week, December 10th, 2013. The next day, Sotheby's had a sale. We'll review Sotheby's results next week, but Christie's, the results were magnificent to say the least. And as Harold was touching on, it was a lot of the smaller, lower-priced diamonds that did well. But we're going to start with a D-Flawless. And Harold has spoken about the white D-Flawlesses for quite some time. Lot 496, a diamond ring, weighing approximately 52.58 carats. And this was a D-Flawless. The estimate on it, $9.5 million. It went for $10.9 million. A stunning result for a D-Flawless for those that have invested in D-Flawlesses. But to give you an idea, we have lot 292, a colored diamond and diamond ring. This is a modified shield-shaped fancy vivid purplish pink diamond. It weighs approximately 0.99 carats. The estimate on it was $100,000. It went for $185,000. Lot 481, a colored diamond ring. And this is a square-cut fancy intense pinkish purple diamond, weighing approximately 1.02 carats. The estimate on it, $80,000, went for $179,000. Lot 94, colored diamond and diamond ring, and it was a pear-shaped fancy deep yellowish orange diamond, approximately 2.78 carats. Now, the estimate on it, 60,000. It went for 149. Also, lot 294, a colored diamond and diamond ring, set with a circular cut, fancy intense yellow diamond, 5.25 carats. And the estimate on it, 60,000. It went for 143. And we have a few more that I wanted to get to you. 145, lot 145, a colored diamond and diamond ring set with a cut, cornered, modified, rectangular cut, fancy yellow diamond, 6.34 carats. The estimate 60 went for 118. Lot 72, a colored diamond and diamond ring. And this is a fancy intense yellow-green diamond. The estimate 20,000 went for 52.5. And two more. Lot 237, a colored diamond and diamond ring from Tiffany & Company. And this is a fancy yellow now. The estimate $8,000 to $12,000. $8,000 to $12,000, Harold. It went for $40,000. And finally, as I mentioned, that D-Flawless went for $10.9 million. We'll be happy to send out the auction results from Christie's. And next week we will review Sotheby's. But outstanding results for those that are investing in diamonds, as we're seeing at major sales in New York, Geneva, Hong Kong, all over the world, Harold. Colored diamonds doing well at auction.
I'm so proud of it, Randy, and truly happy that we brought this market to our clients 10 years ago. And again, it's just doing tremendously well. You know, you just got to sit back and really think that if somebody is going to invest that kind of money in an asset, they're not doing it, you know, to lose money. If somebody's spending $10 million on a diamond or $1 million on a diamond or $60,000 on a diamond, they're doing it, you know, for the purpose of making money. Obviously, the enjoyment that you would get by owning a diamond like that, putting it on your wife's finger around her neck and letting her, you know, wear something that magnificent. I remember when I was on Bloomberg and we put Elizabeth Taylor's 95-carat diamond necklace and her 22-carat earrings on Deidre Bolton. I mean, she was like a giddy little schoolgirl. The fact to be able to wear something like that has just got so much excitement to it. Again, I got letters back from both Deidre and Carol, and both of them said that it was one of the highlights of their career was to get to wear Elizabeth Taylor's pieces. So, again, we've got some of the most amazing pieces. Take some of your money and put it to work for you in the right way. Something that you're going to enjoy, something that the longer you hold on to it, the more and more and more it's going to go up in value. I definitely have to reiterate this, though. Investing in diamonds is not a short-term investment. You don't buy a diamond today and sell it a year later or 2 years later. You're just not going to make any money. The biggest results have come from holding on to that diamond. Most of the biggest returns on diamonds have come from people handing them down from generation to generation. You know, that vivid orange diamond that sold for a record price of $35 million, here's the story on it. As a rough diamond, it was actually purchased for under $2 million. It was estimated to sell for $17 million. It sold for $35 million, and then the same day, it resold again for another $5 million on top of that. So that's what's happening in the market. The longer you hold on to these, the more and more they go up. If you're going to invest in Argyle Pinks, it makes absolutely no sense to buy an Argyle Pink and sell it before the mine closes. That defeats the purpose of doing it. The reason that you're buying and investing in Argyle Pinks is that the mine is going to close. They produce 95% of the world's pink diamonds, and there's not going to be any more. So you give it the 6 years to run out. You give 2 years for all the diamonds to be totally gone, and then you see what happens to the prices. They'll go off the charts, astronomical numbers. A vivid pink Argyle could go up 1,000% from where it is today, and that is not available in any other investment aside from this type of asset. So again, as Randy just proved, and we'll send it to you for all those that want to see it, even though it is in the newsletter this week, it's the lesser priced diamonds that are selling for fortunes, and that's what we bring to the table. Yes, we have diamonds that are in the multi-millions, but most of our clients are hard-working, everyday Canadians that just want to do the right thing. They're getting 2% return on their money, and that's not enough to get by, and then the stock market is the riskiest place to put your money. diversify and get something into the diamond market, if you give us a call, we're going to show you some of the most amazing diamonds you have ever seen within your comfort level. If you got 20,000, we're going to show you flawless yellows. Also, don't be confused. There's other dealers out there that are selling diamonds that are not up to par. There's such thing as an
Harold,
Indian
we're tight
yellow.
on time here. We're about 30 seconds.
Okay, again, go to the website and enjoy a beautiful supply of diamonds. They're doing extremely well.
Harold, thank you for your knowledge and another great show.
Well, thank you very much, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold and let him explain to you what some of the other dealers are out there doing and the quality of diamonds they have versus what he has, the best of the best. Connect with the best of the best. RareColoredDiamonds.com. Harold's telephone number 1-800-432-1022. To invest in precious metals, Harold recommends worldwide precious metals. WWPMC.com, telephone number 1-866-623-2002. We will be doing shows every week throughout December. Thank you for listening. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.